Hi traders, I want to show you an example of an inverse head and shoulders pattern that's set up on the US dollar Swiss franc on the hourly chart. This is a daily chart that I've got up, and you can see we've been in a nice downtrend. And then have a look at this overall structure here. You can see we have a big inverse head and shoulders that's set up here. You can see here left shoulder, head, right shoulder. Just put this line across here. You can see this big dealing level here, left equals right here and here. Okay, so we had a key area of support. We got this larger inverse head and shoulders, which is a reversal pattern. If we take our Fibonacci tool from the low up to the high, just have a look at that, 62% or 618% with that left equals right shoulder. So we had a key area on the higher time frame. So what we want to do is we want to look for a pattern on the smaller time frames at this area, okay, to try and reduce our risk. So if we move over, I'm just going to move this across and let's get rid of this eclipse quickly. If we move over to the smaller time frames, this pattern actually set up on the hourly chart. You can see coming into this key area, price dropped, it then rallied, it then dropped again. Okay, so you see how it goes deeper and then it rallies. You can actually see if we just move this line across here, you see how we had this dealing level right here, we had support, becomes resistance, you see this block and then spikes back into that area. There's a trade all on its own right there. Okay, that's a different pattern, a base, that's the base trade on the hourly chart, and it popped up. In terms of the actual potential head and shoulders pattern, you see how price rallies, comes up, tests the highs here. You see how we have this dealing level here. Okay, we've also got, if you have a look here, we've got this spike low, which is something you want to pay attention. See how we have support here, testing that area of resistance, and then this block, as well as this area. So we've got quite a few important points to reference here. If price comes back, that area there is obviously how I like to trade the actual inverse head and shoulders pattern. Okay, but obviously, you know, you've got the chance of price not getting there, so just keep that in mind. If we have a look at the swing up, let's just have a look at where we are in terms of the Fibonacci levels. So there's the 70.7 and there's the 79 lining up right on top of that level. So that's real nice confluence. Let's just step this forward a little bit. Okay, so what I want to do once we start coming off these highs here is look to place an order, as you said, 1990 area. That's a pretty good area right there. We obviously got these lows as well. The next high is at 93. Okay. If we go to our platform, put a pending order in, we want to buy at 90. We've got 3 just above that, and I want to add the spread. So if we go in around 90, let's call it 96, we average these prices out, 93, 90 plus a spread. So if we put an order around 96, 97, let's go to 96. So that's going to be 3 pips above the 90 area, so sort of into that level there, that 93 level plus the spread, and we'll see if we can get a fill around that area. Okay, as I said, you know, if you go specifically for that number, there's nothing wrong with that. I like to add a few pips above, especially on these bigger patterns, like on the hourly chart and 4-hour patterns. I like to add a few pips above or below the level to try and avoid price spiking just sort of a few pips short of the level and then going. You'll see that happens more often than not, especially because you're competing at these extreme areas. You're competing for institutional flows. Okay, they need those areas to get into the market. Okay, that's just how how this orders work. Otherwise they're not going to get filled at prices they want. So I just want to modify this. We can put a stop loss in. The stop loss below the lows here, okay, so it's around 75 area. It's just, where's 20, 1, 2, 3, 4, 5. Let's put 25 pips to start the trade. Okay, in terms of take profits, okay, we've obviously got this area up here, nice resistance over here. You see how we have this level right here holding us resistance, comes back, takes support, doesn't quite make it down, just makes it to this little block here, then comes back, tests resistance. We've also tapped that little block. So in and around this area here is not a bad area, okay, to look for profits. Remember though, we've got that big higher time frame inverse head and shoulders on the daily. Remember the big pattern here? Okay, so we could quite easily pop up further, you see, up towards these highs maybe, or even this block here. See this last bullish candle before price broke down, nice area of resistance. We could also, I'm just going to get rid of this fib here and here, we can draw fibs from this swing down and just see where your key levels are. You see this 62 level lining up with that level. That's a very, very nice area. Okay, in terms of the risk reward, you can see you'll be looking at 130 pips for 25 pip stop. So the risk reward, or your R, is really, really nice. So the other area I'd watch is in here. You see this reference here, resistance becoming support. Let's go to the 4-hour chart. And obviously we've got this, you see this block here. Okay, that's definitely something I want to look at. So I think what I'll do is I'll look for a target up towards this area here, testing this area of resistance, take half off if we get there, if we get filled, and then look to target further up. Also, see this area here, this block. Okay, these areas here on the 4-hour and daily, you see these blocks here and here. These are absolute key areas. You do not want to just look them over. Okay, be very, very cautious of them. These are stacked orders, and you're going to see some big order flow coming in around these levels. So that's the plan. Let's just move this forward and see what happens. So just following price down. Okay, you see we're coming short of this area. Okay, now as I spoke about, remember we spoke about flows, very, very often going to come in before a level. You see it spikes up into this area of resistance, coming down again. So we're looking for a pop lower. Okay, still hasn't come down. Looking around this area here to here, you see this wick low, tasting this base, and here. Okay, so we've just been spiked in at this area here, just been taken in. I'll just show you the pending order, and you can see, look at the immediate reaction. We get 6 pips up. Just zoom this up. Let's just have a look where we've bounced. We've come down and rejected off this base right here, this low. So we haven't quite come down. We've come as low as what was the low on here? The low was 93. Okay, so we've pretty much just been taken in on that. There's going to be times when you miss these trades, guys. Okay, that's just part of the game. I've missed plenty of these trades. That's why I like to put the order a few pips above or below a level, okay, so that you stand a better chance of getting fooled. Here again, experience is going to be the best key. There's no black and white rule. As I said, you're going to miss plenty trades along the way. So now price starts to release. Okay, we had a big move up here. I'm stepping forward in an hourly chart. So around this area here, I want to be taking profits here and here. And this block, let me just go to a 5-minute chart quickly. So with a big spike up like this, we're testing the area of resistance. First thing I want to do is move that stop to break even. And I just compress this. So this is the area right here that I was watching closely for profits. See, we spiked up into this area here. We just want to watch to see in terms of rejection. We start getting any kind of weakness. I want to get this position off, or get part of it off anyway. So now let's go to the 4 hour. We're spiking up into this block here. See that last candle there? Okay, that's definitely a place I'm going to be watching. So I'm going to take part of the position off. We've moved up into this area. This area here is absolutely paramount in terms of watching a key level. So I'm going to close part of the position up at this area. Like I said, if your platform allows you to do it automatically, have those limit orders in, okay? I like to watch to see how price releases off my area before I start saying I want to take profits here or there, because each situation is going to be different, okay? Do not have a black and white mentality in terms of, you know, price must do this and I must do that. We're trading discretionary here, so we want to you know, use our brains. Let's just step this forward. See price showing a bit of rejection here. See, it taps up into that block slightly deeper. So we've got half our position off. I'm looking further up for the rest of the position. We don't have any kind of swing highs or lows on the hourly chart for reducing risk just yet, or moving that stop up. We've got, you see this area of resistance here? We've got these areas that can protect us, but at this moment in time I want to just leave my stop where it is for now. Okay, so price is coming down a little bit here. Okay, that's expected. So watch this range on the hourly. You see how this area starts to show signs of weakness? Let's look at that 4 hour chart. Okay, so we spiked up into this area here. We've closed above this level here, okay, which is good. So I definitely want to eye this area out. If we start moving, closing below this 91.38 area, then I definitely want to get the rest of that position off, okay? So see a price stepping down, having another pop up. What I want to do, I just want to go to the 15-minute chart now. You see that we've now had, for the first time since we've released from here, we've now had a nice swing low form. So what I want to do is I want to get my stop to just below this area here. So around the 91.40 area, I'm going to move this up. Okay, remember we're up at that key area of resistance. This is the first swing we've got now, and we're coming up towards these highs now. Sellers, they're going to come in towards these highs and above the highs. So I really want to see if the buyers are in control and we can get a push up. So you can see here, still looking a bit weak at the moment. Just step this forward. Okay, so there's the release down. We've just been taken out on that remainder of the position. As I said, these areas are absolutely key on the 4 hour chart. Let me just move over to that 4 hour quickly. You see that block right there? Okay, do not pass on those areas. They're absolute key, and as I said, you can look to place trades at those areas as well. Okay, if you find patterns there, if you find limit orders just selling at an area of support resistance is too aggressive for you, then look for a pattern. So just having a quick look at the orders here, we've got part of the position off at 61, and then we stopped out for the remaining at 44. And let's just step this forward to see where we are in terms of this area holding. Okay, prices come right back. So a little bit of a bounce off that area. You see price just starts drifting low. You see how it comes back, retest that block right there, and then it moves back into that same place where we started. You see how we have this spike lower, just filling in more orders. Okay, it's lower, 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 more orders gathered below those areas. So that was a inverse head and shoulders pattern that's set up on the 60-minute chart on the dollar franc.